Hi everybody. Thanks for that introduction, Eric. I'm pleased to be here. This is my third time in this conference, and what I wanted to do this time around, I want to give you a good heads up where we stand in our project, what we have been doing, and what our future plans are in the next coming years. So to give you a bit of a background, we are based here in South Greenland. This is in a gold belt which is called Nanortalik gold belt. This is a Nanortalik gold belt. We have consolidated three companies or assets from three different companies into one company, into AEX Gold. Our most advanced asset is the past producing mine Nalunaq, which we will focus in starting production again next year through a bulk sample, and then in full production in 2 years' time. Furthermore, we have all of our exploration licenses here and around. The more advanced one are the yellow one called the Vaga licenses, and then we applied for new licenses here that have been explored and developed by other people. All of our licenses are set up that they all have outcrops of quartz vein, granodiorite, sulfides on surface, high grade. I will go through that a little later. So our opportunity is we are high grade. Our resource is at 18.7 grams per ton, so our all-in sustaining cost should be fairly low. We have significantly de-risked it since we acquired the asset in 2013 by doing exploration and development on infrastructure. We have strong cornerstone investors, both in institutional funds, sovereign funds, and family offices that have been behind the project ever since we started it, in a way that every single person has invested in every single round. The management is large investors themselves, including myself, which I will explain in a bit later. We have significant infrastructure in place. This includes harbor, a 12-kilometer road. We have a processing plant. We have 11 kilometers of underground mining. This means that once we go back into production, we have to spend significantly less than you would find with other developers. We have understood the structure of the deposit, where it is heading. We don't, and we have a fairly clear idea how that looks like. So we have a significant resource expansion within us. We built our team since 2013, and they are based. I'm based in Reykjavik, but all of our team, financial team and operational team, executive team is based in Montreal, Canada. And we have always managed to get our targets and be under budget. We have the opportunity to produce hydro and wind on site that we can both use for our mine and for the local community that is a town that is called Nanortalik. So we can produce clean, ethical gold on site and process it fully. Greenland, give you a quick overview of Greenland. In Greenland, you have 50,000 people who live there. It's a tier 1 jurisdiction. It's under a Danish flag. They build their mining laws based on both Scandinavian and Canadian laws. They are currently getting subsidies from Denmark, and they see mining as one of their new revenue stream to get further independence from Denmark. Okay, so they're really pro-mining. Secondly, all land in Greenland is owned by the government, so you don't have any land issues or anything like that. And thirdly, where we are operating, we're not in anyone's way. There is no one who lives there. The south coast is open all year round, so there's no sea ice that clogs up there. This is more southerly than Iceland, so to give you an idea where we are, this is more southerly than Iceland, where I live. So currently the guys are working on site. We have some little amount of snow, but they're still drilling. Okay, so the Gulf Stream comes up here, heats up this area. There are big fisheries out here and here, so you would have the same latitude as Helsinki, Oslo, and other areas like that. Our current price is 41 cents. We got listed on 50 cents, so we're a little bit under our listing price at the moment. We have not much volume at the moment. That's due to the fact that you have a large portion of the stock is held by these larger funds, which are supporting them every single time. There's no debt or anything like that. So far, we raised 15 million since we got listed. We just raised 5 million in July, and that the largest contribution there was the Danish Growth Fund and Greenland Venture Fund, which are growth funds / sovereign funds of Denmark and Greenland. I own 12% myself, and Graham Stewart, our new chairman, he owns 2% himself. And we have our incentive is to make sure that our capital is spent mostly into the ground in building the project rather than any kind of too high salaries or anything like that. Cyrus Capital is our largest shareholder, on 20% share, and they're a $4 billion fund out of New York. So our team, my background is that I've been in geothermal, oil and gas, and now mining. I founded my first company back in 2011, which is called Orca Energy. We built up district heating networks in China and in Southeast Asia. Together with Sinopec Group and City Capital and other funds, I exited that investment together with my people in 2012. I then founded this opportunity, and basically in every single round I spent my own capital in building this project up. We got Ingrid Martin, which is our CFO, and Martin Bernard, which is our Chief Operating Officer. They're both based in Montreal. It's very much important to us to do everything on a high standard in a way that we think is the best way to do it. Behind them you have GE Mining, who is our advisor in Montreal, also to assist us on all front. Joan Plant is our corporate secretary. She was with our predecessor, and she is involved with all day-to-day dealing with both the government and licensing, etc., etc. If I didn't say it earlier, we're fully permitted also in the Nalunaq mine, which is important as well to start production. We then have Graham Stewart, which is our chairman. He was the CEO of Faro Petroleum that just got sold it was a hostile takeover in February this year for 800 million. So we have people who have built up companies, developed them, and executed the sale on them, which is important. Furthermore, we have different skill set in our board. Giorgio Quinty is a lawyer. Robert Menard is our mine builder who's been with Campior, Newmont, and others. And George Foley is our corporate director. So the development strategy for Nalunaq is very simple. We have taken out this year more than 20,000 tons of ore that we have the opportunity to ship out early next year as a bulk sample for trial processing. We finished the road also in Nalunaq and to build the bridge, so that is quite a clear mission. Next, we are also doing a full audit on the processing plant, and we have the opportunity to take both remnant resources and the current tailings and reprocess that. So over the next 2 years, we will be looking to both produce from a bulk sample and to run the processing plant on the ground. The idea is then to develop into the new ore zones that we have in front of us, to then go into full production after that. On the exploration properties, we will be doing advanced geophysics, we will be doing some drilling to develop them further, and the idea that we can have multiple deposits like Nalunaq or even bigger deposits. We have all of it. So this is the Nalunaq mine. This is a road that comes from the harbor here, all the way up here and into the mountain. The mine starts in 220 meters and goes all the way to 720. The deposit is like a piece of paper that goes through here, and it's basically continues all the way to the top and on the other side. We have 263,000 ounces as a resource, which is a modest resource, but we have more than 1.2 million ounces in an exploration target, which I'll explain in a minute. Historical production was between 50,000 to 70,000 ounces a year at a diluted grade of 15.4 grams per ton. And by that time, they were directly shipping out the ore to Newfoundland. So there are significant upside in our internal models of doing actually a little bit better than that, even though this was a very profitable and good operation at that time. So this is looking at the mine, directly ahead. So you would have mine workings, which are here: South Block, Target Block, and Mountain Block. In all of these areas here, you have a deposit in front of you, a vein in front of you, which they stopped mining because it was below 15 or 10 grams per ton in those days. This was in the day and age of $300 gold price. What happens in this mine is that over 50 meters, the vein pinches and swell. It drops in grade down to 10 or 15 grams, and then it goes up much higher. We have, it's the same here in Mountain Block and in South Block. What we have been doing in our first year, we did sampling here and we found the vein continuing all the way through the mountain for 1 kilometer. So you can see the phenomenal grades here. The second year, we started drilling here in the mountain in the South Block, and we've done 3 consecutive drilling seasons to understand the structure there. We are more concerned and focused on the structure than necessarily grade. This has a high nugget effect deposit, which means your grade is going to vary a lot. Our next stage is to start driving on the structure, which is very clear and straight, and then we are able to actually turn some of that target into reserves, or that's our hope. So this is, they did a long hole stoping on this deposit, which is explained here. So you do tunnel here, 10 meter below, you do another tunnel, and then you blast the material, and then you truck it out. All of this mine infrastructure to get from 220 meters down here all the way to 720 is in place in the mine. And this is why all of this infrastructure is so important for us, because we don't have to build it and we can utilize that to extend new ore zones. These are our licenses in this kind of a belt. This is the same goldland that runs through Sweden and partially Finland as well. So we have taken up all of the licensing in this region. To give you an example, every single license here, they have, you have Kangaluku that used to be owned by Goldcorp back in '98. They have 120 gram per ton over 1.2 meters, and that is 700 meter long. You have in all of these different zones where you have veins or sulfides at body of high grade on surface. What we haven't defined in this deposit is how large they are. Then we have to step out and drill them. But it's all there. That's the beauty about it. The most advanced one is called amphibulate ridge, which I will show you right now, just to give you an example of how Greenland is prospective. This amphibulate ridge, you have 3 veins, which are similar to Nalnag, that goes through here, and they are running on, the highest sample taking from a quartz vein here is 2,500 gram per ton. You have more than 30 meters of channel sample of 70 gram per ton, and actually in between those veins you have granodiorite, which is the altered granodiorite, and that's also mineralized. So in femoral zone you have grab sample of 12 gram per ton, Öresund zone you have 14 gram per ton. So either we have veins, which would be more Nalnag, which we actually can just build up a road and go here and start doing a bulk sample here, or even define it more into underground mine. Or potentially you have a mineralized structure on and off throughout this whole 2 kilometers, and that's what we want to test. Then this obviously will be much, much larger. But my point here is that this is surfacing, and this is something, we're just scratching the surface. Over 20 kilometers, you have these high-grade veins and structures coming through it. This is a kind of a structural shear zone that goes through all of South Greenland, and so it has a significant upside. Our most earlier stage exploration target is Tartok, which is a little bit further away. This is Archean greenstone gold belt. Again, this was explored in the past and has some phenomenal grades and potential. So the opportunity here is that we can develop fairly quickly into positive cash flow already from what we have on site right now. We have the infrastructure, we have the team, we have the people on ground that can work in the mine and used to work in the mine. There is a hydropower plant already in the region with a local power company. There is an international airport built by the American called the NASA SUAG. So we can increase our resources by step, but at the same time generate very good cash flow from a high-grade resource like that. So we believe that this opportunity has a lot of merit in conjunction with other opportunities. At least we haven't gone down the route of what David Finch mentioned earlier to merge with other companies, because at this point in time we don't see many opportunities that have the same potential at the moment. But obviously we're married to the story, so. But thank you. That's it.
Thank you very much, Eldur.